Hello everyone, and thank you very much for tuning into my YouTube channel. My name is Jimmy Le-Tang. I'm a chartered professional accountant and I practice in tax matters related to real estate. So today's video is going to be a follow-up from the video that I did previously talking about the British Columbia speculation and vacancy tax. In that particular video I talked about the taxable properties, taxable regions, and the tax rates. And today we're going to talk about satellite families and of course the available exemptions when you're filing the annual declaration. Let's get right to it. So a satellite family is defined as a family where less than 50% of the combined household income is taxed in Canada on Canadian income tax returns, of course. So an example of that would be where you have a resident spouse and perhaps a non-resident spouse, and the non-resident spouse is the main income earner in the family, and the non-resident spouse's income is more than 50% of the combined family household income. That would be a situation where the resident spouse is a member of a satellite family. Now, it's important to know that you can still be a member of a satellite family even though you are a Canadian citizen or a BC resident. So you really got to watch the definition of a satellite family and see if you fall into that definition. Okay, so let's talk about the available exemptions. It's important to know that you claim your exemption at the same time that you're filing your annual declaration. And exemptions need to be claimed in respect of each owner. So each owner needs to file their own annual declaration and claim their own exemption. And as far as exemptions are concerned, they're kind of broken up into three main categories. The first one being occupied by owner. The second one is a property that is occupied by a tenant. And then the third are properties that are currently under development. Now, it's also important to note too that the list of exemptions is quite long, in-depth, and it's really important that you check out the full list of exemptions. You can find that at gov.bc.ca, search speculation tax to find out the full list of exemptions. That link is also in the comments to this video as well too. Make sure that you are well aware of the other exemptions in case you fall into any of those. So let's talk first about the occupied by owner exemption. The occupied by owner exemption is available to all Canadian citizens and permanent residents who are not members of a satellite family, and is the place where the owner occupies the residence more so than anywhere else in the calendar year. So a primary place of residence, again, does not take the definition that is normally associated with principal residence for the purposes of the Income Tax Act. Owners with multiple homes, be it a vacation property or a secondary residence, can only designate one property as their primary place of residence. Again, because the primary place of residence definition is the location at which the owner occupies more so than anywhere else as their place of residence. Now, unless for work or medical reasons or due to separation or divorce, spouses must designate the same property as their primary place of residence. In other words, you cannot designate separate properties as the place of residence for spouses. And it's also important to note that the principal residence exemption here for the speculation tax is only available to Canadian citizens and BC residents for income tax purposes. The principal residence exemption is only available to Canadian citizens or permanent residents of Canada who are also BC residents for income tax purposes. So if you don't meet those conditions, the principal residence exemption is not available to you. The other primary exemption available are for homes that are occupied by a tenant. Now for 2018, the home need only be occupied by a tenant for 3 months out of the calendar year. In future years, the home will need to be occupied by a tenant for 6 months out of the calendar year to qualify. It's also important to note that the residency must be for terms of at least 1 month or more, and you can combine multiple tenancies, to meet that 6-month minimum. When considering the occupied by tenant exemption, it's important to note that the provincial government makes a distinction between arm's length tenancies and non-arm's length tenancies. A tenancy at arm's length is one where neither party, the landlord or the tenant, has an advantage or a privilege over the other. In other words, the rent that you charge as the landlord is fair market value rent. And of course, as a tenant, you want to pay the lowest amount of rent possible. Non-arm's length tenancies, for example, are typically tenancies between family members, could be tenancies between friends, and could also include tenancies between employer and employee. Effectively, the tenancy relationship might not be at fair market value terms. That's kind of the defining criteria with respect to non-arm's length tenancies. Now, the exemption for arm's length tenancies are pretty straightforward. All owners would be eligible for the occupied by tenant exemption if the tenant has no advantage with regards to the tenancy due to a family or a personal relationship with the owner or owners. Also, there needs to be a written tenancy agreement in accordance with the Residential Tenancy Act, and that the tenant also occupies the home as their place of primary residence as well. So a tenant cannot use the property as a vacation home or a temporary home. It must be their primary place of residence. Now, for non-arm's length tenancies, the provincial government considers two main categories. One is for owners who are Canadian residents Canadian citizens or permanent residents. And in that case, the tenant needs only to have occupy the property as their place of primary residence for each calendar month. So you would add up the calendar months that the tenant occupies the property, and if you meet the 6-month minimum, you're good to go. And the other category that the provincial government looks at are with respect to owners who are not Canadian citizens or permanent residents. So in other words, foreign owners and members of satellite families. Now, if you happen to be a foreign owner or a satellite family and you have a non-arm's length tenancy, the criteria to meet is a lot more strict. Number one, your tenant must be a Canadian citizen or a permanent resident. Second, your tenant must be a BC resident for income tax purposes on December the 31st. Your tenant must also not be a member of a satellite family themselves. And then lastly, this one is likely the harder one to meet, is that your tenant must have income in a given year that is greater than 3 times the fair market value rent of the entire building that you are renting out. So in a single family home, if it's a basement suite that you're renting out, it looks at the fair market value rent of the entire building, upstairs and downstairs. Okay. Typically that criteria is kind of hard to meet, and you might find that won't be able to use the occupied by tenant exemption if you are a foreign owner or a member of a satellite family and your tenant doesn't meet that income qualifying criteria. Now, the final exemption that I'd like to look at is one for land under development. Owners are exempt from the speculation tax if they undertake reasonable steps without undue delay to either develop the property or renovate the property. And now the provincial government looks at building activities to determine whether or not you are developing land. So building activities as considered by the provincial government would be applying for financing. You might be entering into contracts for design, for engineering, or for building the property. You might be demolishing the property or clearing or excavating the land. You might be actually constructing the property. And of course, if you are undertaking any other reasonably necessary activity to develop the property or renovate the property, that would also be considered as building activities. Now, there's actually a much longer list available on the government website, so do check out that list. But if you have any of those activities undergoing, then your property might be exempt for land under development from the BC speculation tax. Now, again, I want to remind you that the list of exemptions is long. So please do check out the government's website with respect to the full list of exemptions so that you can determine whether you fall into any of those exemptions. Thank you very much for watching my video today. Don't forget to subscribe to my channel. And also, if you go to my website, you can subscribe to my email distribution list. I send out emails related to tax matters for real estate probably once every couple of weeks or so. And until next time, thank you very much for your support. I really appreciate it. Thank you.